Hey guys, welcome back to another fantastic episode of the Breaking Bitcoin Market Update. I'm your host, Justin Wise. I'm the lead analyst and senior mentor at KrakenCryptocurrency.com. Hopefully you guys are having a fantastic day in the charts, in the markets. Today is, of course, January 9th, 2023, foul year of our Lord. In today's episode, we're going to be talking about the weekly market regime of Bitcoin and the broader cryptocurrency markets right now. We're going to look for reversal opportunities, where the current trend is, and strategies for how you can profit during a bear market. We're also going to be discussing, in honor of my new guide that's just come out, which, by the way, you guys can grab a free copy of right now. It's the first link down in the description. The guide is the 5 mistakes holding you back from profitable trading. I've compiled this guide after years of experience and mentoring in the premium trading and investment group. And the first mistake we're going to cover today is lack of a trading schedule. So we're going to be talking on that a little bit. Make sure to grab your copy of the free guide. And if you enjoyed the content, make sure to subscribe and thumbs up if you guys haven't already. But for now, we're going to get to the charts and start breaking down the markets. Let's go. All right. First thing we got going on today, we were going to be starting with the weekly chart of Bitcoin, as we are wont to do. I often talk about the importance of understanding exactly what your game plan is going to be, and you have to do top-down analysis. Often individual traders will start on the lower time frames and develop a directional bias or a trade bias on that time frame. And then as the trade doesn't move in their favor, they'll start scaling up to higher time frames, and often they'll find that they were trading in the wrong direction. In trading terms, we call that picking up pennies in front of a steamroller. This is the individual who's trying to take a short while the market is trending up, or who's always trying to go long while the market's trending down. However, when the market's trending down and they're always trying to go long, it's usually called catching a falling knife. Pay attention to the vernacular. Big shout outs to everybody in the chat. We see Kimo Zabi, Mr. H, as always. Yeah, I apologize if my video is a little laggy. We're going to be working out the kinks. I'm not on the greatest connection that we have right now. I'm working off the Surface Pro, and I'll be upgrading the Beast laptop over here with some new gigs of RAM so that tomorrow's stream will be spectacular. But we're here. We're going to power through. Let me know if you guys have any other issues as we continue moving through this. Okay. Weekly chart of Bitcoin. We have our trend detection system up. You can use anything you like. In this particular situation, we're going to be using our Kraken Cryptocurrency Exponential Moving Averages indicator, which is available for free on TradingView, as well as our Kraken Cryptocurrency Ichimoku indicator that is also available completely free on TradingView. You guys can use it and apply it to your charts. Why are we doing this? We want to know what the weekly trend is. We want to know what the higher time frame trend is, so that as we dive down into lower time frames, we don't lose sight of the bigger picture, of where the market is moving. So what is the current market regime? Well, the market regime is currently bearish. That's very easy to see. Price is currently trading underneath all major moving averages, and the overall angle or slope of those moving averages is to the downside. As we can see, our moving averages are simply moving down. That is the slope or angle of our moving averages, and lets us know overall where the direction of the trend is. Now, these are lagged indicators, so this is going to be a compilation of all the data that's led up to this point. They're not leading indicators. We'll get to that as we go down to a lower time frame. Weekly trend. Bearish market regime. What is the current trend within that regime? Well, the current trend is one of consolidation. We can see here that price has consolidated for nearly 2 months following the collapse of FTX, where price chunked down into the $15,000 range, and we have lazily listed back up. As we can see, let's scroll in here just a little bit. Yeah, as we can see, price bounced up here on the weekly time frame up to the 13 exponential moving average, or what we're going to call the WEMA from here on out, and found resistance there and got knocked right back down. But what's more important to me, and this is a little free alpha for you guys, what I think is probably one of the absolute best moving averages to use is not even really a moving average at all. It's a Donchian. It's the Ichimoku leading line, the Tenkan-san, which is usually set at a value of 9. And that is going to be the blue line that you guys see here on my chart. This is the Tenkan-san. And as you can see, the Tenkan-san has correctly predicted the turning point of Bitcoin bear market rallies throughout the entirety of 2023. As you can see here, when we rallied briefly in April of 2022, we rallied up to that 47,500 mark after falling down to the 32,500 level. We got swatted back down as we ran into the Tenkan. There we had a rare cross of the Tenkan and the Kijun, and that Tenkan Kijun cross really heralded the continuation of the downside that we've seen so far. Following that, we also had a little bear market rally back right before the big collapse of FTX right here back in October of 2022, and the Tenkan-san correctly swatted price down. So if we utilize that now as a current dynamic level of resistance, we can see that we have confluence between the Tenkan-san leading line and the weekly exponential moving average period of 21, what we're going to call the WEMA from now on, remember? So the WEMA 21 coming in at around 18,927 on the weekly time frame. Give me a second and we'll open up our data window here. Yes, so our Tenkan-san is coming in at 19,117 and our moving average 21 is coming at 19,084. So that's a very important level between $19,000 and 19,084 and 19,117. Let's just call it 19,100 to kind of split the difference. That is where we're going to be having a good confluence of resistance. Now, does that mean we're going to get all the way up there? It does not. It doesn't necessarily mean we're going to be able to get all the way up there. But what it does mean is that it is an important level of resistance. And if we reject from it, or if we trade up to that level, we have a high conviction or high value opportunity to enter into a short for an ultimate downside target below where we're currently trading at in the event of continuation of the bearish markets. We also have a very significant event in the case that we actually close the weekly candle above that level. Then we would be looking for pullbacks on a slightly lower time frame like the daily to be able to get into perhaps a newly emerging bullish trend. And it's at this point that I really have to ask myself, because up until this point, I've been very consistent on a price target of $12,000 to $13,000 for this bear market. I first posted about this, I believe, back in March of 2022, utilizing data from Glassnode, utilizing the delta price, as well as the realized price and balance price. These are all metrics available from Glassnode Studios. And the delta price has successfully predicted the bottom, not the bottom close, the bottom wick of bear markets of the past, the bottom wick to the price, So I've been very consistent about that predicted price target. But now that we're here in this long period of consolidation, I do have to ask myself, is it possible that the bear market is over? Are we seeing the consolidation that we saw back in early 2019 before an eventual breakout? And it's not because the charts are moving sideways. It's not because we've gotten a couple of green weekly candles. It's because the sentiment of everybody in the current marketplace seems assured that we're going lower, seems assured that 9K is just on the other side of the hill, that we are moving down and there is nothing, not even God himself, who can stop our descent into death. And it's usually at moments like this, when everybody is convicted that we're going to move down, when everybody believes that the good times are over. It's usually at those moments when things turn around, when you find the dawn on the other side of the door, when you see the light at the end of the tunnel, and when the bulls themselves come out to march. But time will tell. Time will tell. As traders, as trend-following traders, we need to be patient and wait for confirmation of the trend. However, I will say, I have stepped up the dollar value of my weekly dollar cost averages into Bitcoin. And like many investors throughout 2022, that was a painful event. It wasn't pleasant. It's not pleasant to dollar cost average in on the way down. It's not a good thing. It doesn't feel good. It doesn't feel good at all. Guys, I bought Bitcoin at the top, at the middle, at the 3/4 to the top, at the 1/4% down, every single week, every branch of the tree on the way down, I dollar cost average, because that's what I've been doing since 2016. DCA. Every single week. Money Monday. Make it a thing. It doesn't matter if it's $5, $25, $50, $7,000. That's all going to be relative to your capital. The important thing is that you need to be putting your money into the market consistently over a period of time, up and down, if you intend on holding this investment for the long run. That is the way you get the good prices. And it's just the most tried and true successful investment strategy out there. Period. 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 That's a dot for those of you who might be confused. Okay. Weekly time frame, bearish trend, moving up. We do see, of course, a little bit of a bear market rally right now, and it might be sustained. Why? Let's switch from our trend detection system to the pathways to profit reversal system. Now, that might sound like a misnomer to those of you who have gone through the course and understand the trend following strategy and the way that we do things around here. If you guys are new and you're not sure about the way we do things around here, just stay tuned. It'll all make sense eventually. But it is important to identify when the market might be potentially overheated so that we can then look for opportunities to trade in the dominant direction or look for high risk opportunities in the opposite direction, picking those pennies up in front of steamrollers. They can be profitable if you time them correctly. It's timing them correctly where it can be difficult from time to time. Okay, so as we can see, we've got our Bollinger Bands, we've got our Wave Trend Oscillator, our CM Williams VIX Fix, and our CM Laguerre PPO. These are very good reversal indicators. You can use whatever you like. We're going to use these for now. Okay. Weekly Bollinger Bands are continuing to contract, all right? We had a little bit of expansion there on the weekly time frame with the big FTX collapse, but what you will notice is that we pierced the lower boundary of the bottom of the Bollinger Band on that weekly candle. And generally, as a rule, what we've seen is that when we pierce one side of the Bollinger Bands, we retrace and touch the middle band. That's what's been happening consistently, and that's a pretty good price pattern rule to follow in general in any market on any time frame. As we can see, we've got a little ways to go. Where is that coming in? About 18.348. So earlier we talked about 19,100 being significant. I think we could wick that high if we are going to reject here from resistance. Remember, key point, if we continue following the bearish structure, we rise up here to resistance after a violent move to the downside, we weakly walk our way back up, and guess what's going to follow that if we reject? It's going to be a second violent continuation to the downside because that's how this bear market has been working. It's been big chunks down, little tiny baby steps up, big chunk back down, little tiny baby steps up, big chunk back down. And if you guys don't know, that's how all bear markets work. Selling is violent and uncontrollable. So the selling moves come very fast, and generally fear is more powerful than greed. Fear is more powerful than greed. You would rather avoid one bad thing than have 10 nice things. That's how your human brain is wired. We're wired for survival. It is more successful for you to assume that that noise that you heard is in a malicious attacker and get up to check it, rather than the 9 out of 10 times where you're like, no, that's okay. It's probably nothing. And the one time that it is, because those genes don't survive very long. So in the same situation, when we are selling off to the downside, they are violent moves. And we're going to see another violent move if this bearish trend continues. We're going to rise up. We're going to lazily list up to resistance. And then we're going to chop down faster than you could blink. It's going to happen. It might happen. I'm not going to say it's going to happen. It will happen if the bearish trend is still in effect. So, key strategies to point out. I think that high conviction long plays can still be made here, perhaps. Moving up here to that 18.3, and if we continue to rally above that, which we'll see on the daily time frame, up to 19.1, and then it's at those areas where we want to begin to look, consider, or position ourselves in force to continue on down to the downside. Now, in the event that we break above these resistance levels, let's ride the wave with our long trades, which we currently have up in the premium trading and investment group, and wait for overextension on the daily time frame, wait for the pullback, and then we'll really see, because we'll be taking out a higher high there at that point in time, and then perhaps we might actually have the structure to move into a truly bearish trend. All right, so weekly reversal system. We do have some regular bullish divergence on the weekly time frame here, as evidenced by our oscillators. We have recovered from the oversold conditions that were evident prior to the FTX collapse. So the FTX collapse, even with the price movements, pushed us not as low on our momentum oscillator as the preceding months. So weekly bullish divergence. So potentially high value opportunity here for the upside, which we're already in. Let's turn to the daily time frame. And before we look at the same structure here, we are going to go back to our trend detector. What's going on the daily time frame? It paints a slightly different picture. Look at that big bearish Kumo cloud directly above us. We have broken successfully above the 21 DEMA. That occurred just earlier last week, and we were able to ride that breakout all the way up here to our 55 DEMA. So let's scroll back a little bit, and you'll notice that the 55 DEMA is where we encountered resistance previously. However, notice that we did wick above it pretty significantly, almost to the Kijun. Notice that price has now, for the first time in forever, crossed from underneath the Kijun. Okay, crossed from underneath. This didn't happen until back in October of 22, where we got faked out. We have crossed above the Kijun for the first time since October of 2022. So good times, happy times. Our Kumo cloud is expanding, which is just catching up from this big expansion of the FTX collapse. We have put in a lower high and a higher low. This doesn't really matter because this is intra-market structure. Our current market low is down here at the 15.4, but the area we want to be watching is the 16.2, the $16,200 level, because that's where our shelf of VPVR support ends. And breaking down below that level would be relatively bad because there is a very big low volume node directly below us, which leads all the way down to the $12,000 to $13,000 area. So again, I say and quote, if we trade below 16.2 thousand, high possibility that we get to 12 to 13,000 due to there being literally no support there. As you can see, we have wicked up right to the Kumo cloud, just like we did back over here in December 14th, 2022. Also, we were unable to close above the 55 DEMA. We are experiencing something the same here. Now, history doesn't repeat, but it rhymes. So if notice this, see how the candle following this rally to the upside was violent to the downside. This is only 2.45% in a day, but when you look at what you gained, you gave back like almost 50%, if not more, of the movement up. So we need to be very cautious of that and cognizant of that. If you're long on this rally, which we are, we already hit our first take profit on this move to the upside. All right, just TP1, nothing more, nothing less. So you guys need to make sure that you have secured some profit here. If you're long right now, you have to secure some profit and you have to put your trade in a no loss situation. You have to move your stop loss up to break even. You have to do that. That has to happen today, right now. If you haven't done it, go do it. Don't do it right now. Don't stop watching the video. Open up another tab to do it. We need them views. So let's just point that out. High probability of a reversal here. However, if we look back at that weekly chart and that trend detection system with that regular bullish divergence, we do have possibility here to the upside. Now, what might happen here, what could happen here is we do reject, but we stay above our slower moving averages. So we only have a pullback back down here, maybe to 16.9, and then that higher low gives us the momentum to push up and break into the cloud. I'd be highly interested to see that. But for now, the highest possibility is rejection currently from the 55 DEMA and a pullback. Now, I'm a risk taker, so I'm going to keep my position open. I'm going to keep my position open here because I've already locked in some profits. I've already put my stop loss at break even. So there's no harm, no foul. There's nothing wrong here. All right. And we'll see what happens, guys. We'll see what happens. It pulls back. I get stopped out. I make a little bit of money. And then if that higher low forms, then we'll get long on that. And the reason why I say the trend might continue and not stop at the 55 DEMA is if we go to our reversal system on the daily. Notice and look over here on the daily time frame. When we ramped up there on December of 2022, we almost got overbought. Plus, our Laguerre PPO was giving us a warning signal for overextended to the upside. We're experiencing no such things now. And our Bollinger Bands have been absolutely crushed tiny. And you know what happens when that happens? When the Bollinger Bands get really compressed, they expand. And when they expand, we get a big breakout. Big breakout. No, thank you, man. On Twitch, we do our own marketing. Thank you very much. And back to what we were talking about. Okay, so we want to be very cognizant and cautious about a potential reversal. However, I do recommend keeping long trades open here as long as you've secured profit in your trades in a no-loss situation, because this big Bollinger Band expansion is looking mighty sexy. I will tell you what. All right, that's what we got. Okay, so we've gone over daily trend, daily reversal, as well as weekly trend, weekly reversal. Now, the pathways to profit trading strategy that we use to post signals and provide signals to our premium trading group members, the trading and investment group did signal long back over here on the 5th. Now, I kind of oopsed that and took a little mini short, but was able to position properly. We did get that nice strong breakout. We did position into the long, and we've hit TP1 successfully. So profits are locked in for that trade in a no loss situation. We're not getting any exit signal right now here on Bitcoin. So not much more to talk about there. Our automated bottom feeder strategy is absolutely crushing it. This is the best automated strategy that our premium subscribers will get access to. Just give me a second while this baby boots up. Yeah. While that's booting up, great opportunity to tell you guys to make sure you go to the link in the description and grab your free guide of my new guide. Grab your free copy of my new guide, The 5 Mistakes Holding You Back from Profitable Trading. In this guide, which is completely free, you just click this button, link in the description. It will walk you through the 5 most important mistakes I see beginners or novice traders make that really hold them back from successful trading. Detailed outline of how to fix those mistakes and exactly step-by-step what you need to do to overcome those. Right now, go check it out. Okay, back to the trading. That button didn't work. There we go. That button worked. Sorry guys about the lagging. I really got to upgrade. I'm on like the backup computer right now. Not the backup computer. Unfortunately, it's been like the primary computer while I've been here in Colorado. And it's pretty crappy. So I'm seeing the lag right now. So I apologize for the choppy image. Hopefully the sound quality is good. It is definitely just the onboard GPU. And I will be updating the RAM in the baby laptop ASAP because that definitely needs to happen. All right. So this thing's being super, there we go. Excellent. All right, bottom feeder is currently flat, not issuing any positions, but it just recently closed out quite a few 20 and 30% trades, which I am so happy about. This thing is up about 150% since its inception. So it's been doing about 75% ROE. That's ROE, not ROI. This is actual equity growth, real money in the bank account. Since its inception. So about 75% ROE per year. And, you know, I'm pretty happy about that. Yeah. Everything we ever wanted and more. All right. So listen, this is getting a little untenable because of the laptop connection. So we're going to hop over here to the DSLR and we're just going to have a conversation about the first of the 5 mistakes that I see traders make all the time, and a brief recommendation for how to overcome that. And that first mistake is a lack of a trading schedule. Listen, guys, if you want to take trading seriously, if you want better results, if you want more profits, if you want less losses, then you've got to be consistent. You can't be sloppy with it. You can't just trade when you feel like it. You can't just, oh, I saw a signal on Twitter. Oh, I saw something interesting on Cointelegraph. I'm going to go take a trade. That will not get you to where you want to be. You have to be consistent. You have to be disciplined. You have to treat this like a serious, real big boy schedule and trading schedule. Treat this like an exercise routine. If you want those results in the gym, you've got to hit the gym every day. And it helps if you go at the same time every day. It's the same for trading. If you're trading on the daily time frame, pick a time, be there every single day, turn off your phone, turn off the music, stop watching a podcast over here on another TV, and just focus on what you're doing. Be present, be in the moment, and pay attention to what you're doing. Follow your rules, follow your strategy, don't make mistakes, don't screw it up. And it's okay if you make mistakes and screw some things up. You're going to, of course you're going to, but I guarantee you, if you show up at the same time consistently every day, over time, you're going to get better. You're going to improve. Those losses will go away. You'll understand what you're doing. You'll see better results. And 99% of all the people who might be in the comment section who are saying, no, you know, Justin, some people just, no, they don't. I was a terrible trader for years. Lost more money than I could possibly think of. Well, I could think of it, but you know, it was painful. It was painful then. And the way I turned my trading around was with discipline and strategy. Discipline and strategy, not jumping on the latest hype train. Schedule, 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 schedule. Same time every day, show up, do the work, and you will get better. You've got to put the time in. If you're not making money as a trader, how many hours have you traded? How many hours have you put in? You got to put 10,000 hours into everything to become a master. That's 4 hours a day for 10 years. Okay? It doesn't take that long to become decent though. All right? About 1 year, 6 months, if you're pretty fast, and you can do it. And it's a great life. I can tell you that. All right, guys. Don't forget, that's all for today's market update. We keep them brief. We keep them nice. Don't forget to go grab your free guide of the 5 mistakes holding you guys back from profitable trading. Absolutely free. I cover everything I talked about today and much more in much more detail. If you guys are interested with working with me in 2023 to grow and build wealth, there's lots of information on how to do that down in the description. Multiple ways you guys can get involved with the community and work directly with me. And we will be back tomorrow with another market update covering another one of the 5 mistakes and keeping you guys updated on where the market's going and the best way to build wealth during the bear market 2023. Thanks, guys. Trade safely, and I'll see you on the next one.